gentlemen, this is Andrew Lockwood, your captain speaking. Welcome aboard this 777 out to Dallas, Texas.
V1.
Rotate. Master brake. Gear up. So we're just going to 3 whites now, so we need to pitch down a little bit more, not too much. Just need to pitch a little bit, not too much, just about there is fine. Pitch the nose down gently, just a little bit.
500.
Don't worry, just
One.
coming down.
Side.
Keep coming down.
50.
Light the nose down. Gently. Sorry about that, guys. I was trying to, yeah, sorry about that. Not right on the centre line, I know. Now, you've often heard me in the past talk about the correlation between what pilots do and what successful traders do. Now, before you get too concerned, yes, I am a qualified pilot, licensed pilot, but not qualified on those Boeing 777s that you just saw me land quite badly there at Dallas International Airport. That was actually a commercial flight simulator based at Heathrow, London. A great deal of fun. A lot of the airports have them. A lot of them are open to the public for a bit of money. I recommend you do it if you ever get a chance. Really was good fun. So don't be worried. You're not going to be hearing Captain Lockwood coming over the tannoy anytime soon. In fact, I did do my pilot's license a few years back in the Philippines. I actually bought this amphibious float plane and was having a great deal of fun buzzing around the 7,000 odd islands of the Philippines, landing on beaches and so forth. There you go. There's a few snaps of me there on my plane. But what I did learn when doing my private pilot's license course was pretty much the same as what goes on in the commercial cockpit. It's all about repetition, repeating a process that's been proven successful and safe in the past. And that's exactly what we need to be doing with our trading. Now, before I continue, let me remind you to subscribe to the channel if you don't already do so. Don't forget to hit that little bell notification. That way you'll be notified the moment the next video has been released. Don't forget to follow us on Instagram and of course on Facebook. If you follow us on Facebook, you can tune in live every Monday afternoon, 2 p.m. for a live streaming event where we discuss trading opportunities for the week ahead. Now, I know I often refer to this topic in roundabout ways in many of the videos that I do. And that's because this topic is so important it needs special emphasis. Now, I know a lot of you are going to be watching this video that are struggling with their trading. Some of you, of course, will just be researching this trading business. Is it worth getting into, seeing what it's all about? But I can tell you this. If you follow what I will say in the next few minutes, it could determine whether you are going to make it as a trader or not. And you don't need to spend thousands on a trading course to be told this. And you know what? It has to be one of the most simplest things that we can do in our trading. It's unfortunate that so many do not do it. It's basically about having a checklist, a written down, literally checked off set of rules that we analyze and do before we take each and every trade, before we enter the trade and before we exit the trade. Because every trade you do should be in accordance to some pre-thought out, tested set of rules, not just to be relying on that gut feeling. If you rely on the gut feel, how will you know how reliant your trading is, your strategy is? How will you be able to scale up with confidence without knowing if you just got lucky? So we need to see the defined rules of entry and the defined rules of exits written down and then gather the metrics for this strategy. Now, some traders undoubtedly out there with a lot of experience will be trading without a physical checklist. Now, I'm sure if you've been doing it for years, a lot of it becomes second nature. But my advice is this. If you've been trading with experience of, say, less than 5 years, you should be writing it down and you should be checking it off. By far the biggest challenge when it comes to trading are the emotions. We know that. Now, using a checklist helps massively in controlling these emotions. A checklist enables us to remain objective. So when we see a potential setup, we can check it off to ensure that it complies with our back-tested strategy. Now, it's quite likely that when you start your checklist, you're going to see a reduction in the number of trades, which is most probably a good thing, as you'll be cutting out a whole bunch of losing trades. You'll also be cutting out some winning trades, which is also not necessarily a bad thing, because what it's doing is cutting out the winning trades that were not really part of a strategy in the first place. So you're just lucky on those winning trades. And we really want to not to rely, and we really don't want to be relying on luck too much. We want to take luck away from our trading. So what is a checklist? Well, let's assume first off that you've got your back-tested set of rules, a strategy that you know has worked in the past. It's got a positive edge and you know the metrics behind the strategy. If you don't know the metrics, check out the video on the metrics. It's a great video. I'm sure you're going to find it useful. Now, if you don't have a back-tested strategy, then I'll say this. There's no point in having a checklist. You could be forming a checklist on a flawed strategy, in which case the checklist will be as useful to you as a chocolate teapot. So make sure you have a back-tested strategy with an edge. Now let's have a look at a very simple checklist. Of course, yours is going to look different, depending, of course, on your own strategy and your trading plan. But this is just a broad stroke look at a checklist, what should be included. Okay, so here's an example of a very simple checklist. Now, as I said, every strategy is different, every checklist will look different, but you can use this as like a template of some of the things that you should be including in your own checklist. Now, the first thing I'll say is that you should always name your strategy. If you name the strategy, it means you're taking ownership of the strategy. It actually means something. Now, I've aptly named this the aviator strategy because we have the aviation theme in this week's video. But make sure you name your strategy. Okay, so first up, I think the first thing you should have in your checklist is the trading time. Now, I put down here 8 a.m. to 4 p.m. Eastern Standard Time. Of course, depending on where you are in the world, you'll have your own trading time. The reason why this is important is going to keep you out of trading whenever you just feel like it. Trading in the middle of the night or when the kids go out and you've got some spare time, or jump on the screens. You want to make sure that you're keeping focused trading only set periods of the trading day, the same periods that you've done in your back testing. You want to stop trading just for the sake of it. So setting up the trading time, very important. Number 2 here, the trading entity. I've listed here the euro dollar, the pound against the yen, the US 30. Whatever you intend to trade, put it on your checklist. Again, this keeps you trading entities that you're not used to trading. You might have read some analytical report, like something, and then go and start trading it. This is basically not trading, that is gambling. You want to make sure that you're trading the entities that you back tested, that you pre-set out in your trading plan. Next up, we've got the trend confirmation on the higher time frame. Always important to look at multi-time frame analysis, certainly higher time frame analysis. Now, you can use different ways of analysing higher time frame. Looking for the trend, you may be looking for a 4-hour 8 exponential moving average above or below the 21. You may use an RSI confirmation above or below the 70. You may even use a MACD. Don't go into too much detail at the moment about the different indicators. Of course, there's lots of education out there on that. But basically, whatever you're using for your higher time frame confirmation should be checked off here. Make sure that you're always looking at the higher time frame to get the bigger picture. This checklist will ensure that you do that. Structure. Daily support and resistance and the weekly support and resistance. It's very important, as I said, to look at the higher time frame picture. It's very important that you've analysed what's going on the daily and the weekly. If this is your strategy where you're trend following, for example, you don't want to be buying immediately into a massive level of weekly or daily resistance. And of course, you don't want to be selling potentially into a massive level of weekly support. So checking that you've made sure that the structure on the high time frames has been checked off is very important. Keeps you out of a lot of a trade, especially if you're trading the lower time frames, 5-minute, 15-minute time period. You don't want to be buying in front of a major level on the weekly. Keep you out of a lot of trouble, that one. Number 5, the entry. Now, entry criteria is very important. Every strategy will have, of course, its own entry criteria. You may be looking at price action patterns. You may be looking at hammer candles or pin bars. You may be looking at engulfing patterns, bearish engulfers, bullish engulfers. If that's your strategy, make sure they get ticked off when you see them so they can conform with your strategy. You may be looking at a pullback confirmation. You may be using a 50% pullback, or you may be using an exponential moving average touch pullback, or you may be looking at a trend line pullback as well. Whatever your strategy says, make sure you check it off before you even think about taking the trades. You've got the daily support and resistance, you've got the price action patterns, and of course you've got the trend confirmation. Make sure they're all conforming. Then we're looking at the fundamental data check. This is very important. So many times I've seen people lose big time on a trade because they've placed a trade right before some key big impact news. Always be aware of the imminent news. Last thing you want to be doing on a 5-minute chart is buying 30 seconds before non-farm payroll or a big market moving event. So always check the fundamental. This will also keep you out of a lot of trouble. Make sure you check that off before you place the trade. And then we're looking at take profit and stop loss targets. Now, every strategy, you should have a maximum risk per trade, whatever that is. I put down here 1%. It could be less than that. It could be half or quarter. It could indeed be 2% or whatever it is. But whatever you've got in your trading plan, in your strategy plan, make sure it's checked off to make sure that you're controlling risk on each and every trade. And the risk reward ratio. A lot of strategies will have a predetermined risk reward ratio that you must accept. Now, I put down here 1 to 1. You could have 1.5 to 1, or 1.2 to 1, or 3 to 1. It could even be less than 1 to 1. I wouldn't personally recommend trading less than 1 to 1 risk reward ratio. But whatever's been set out in your trading plan, make sure you check it off before you place that trade to make sure you're getting the agreed or back tested risk reward ratio. And the exits. What exit strategy are you going to be using? Are you going to be using the set and forget? If you're using the set and forget, that means you're setting your profit targets, you're setting your stop loss levels, and you're forgetting about the trade. If you've ticked set and forget, there's no reason why you should be meddling with the trade. If you are trailing an exit, basically that means trailing behind price, then you tick that box, in which case you can move your profit target, your stop loss targets, and of course your profit targets will move as well. So make sure you predefine where you're going to exit the trade before you enter the trade. Is it set and forget, or is it trail? We don't want you changing that midstream. And lastly, this is quite important. It's the results. Were the checklist followed? Was it a good trade or bad trade? Now, don't confuse a good trade with a profitable trade and a bad trade with a losing trade. They're not the same. A good trade is when you follow your checklist. A bad trade is when you don't follow your checklist. And when you come to doing your trade reviews, or when you look at your journal to see how your trading week or month has gone, this checklist will be very important. You'll be able to see exactly the good trade, the bad trades, and you've got your win loss as well. That could be in pips or it could be in dollars as well. As we said, this is just a basic, simple template of how a checklist can look like. And I'm sure you'll find once you follow the checklist similar to this, you're going to find your trading improve massively. Now, the big challenge when using a checklist is to resist the urge. Every time you have a losing trade, to filter out those losing trades by adding in additional criteria. Don't beat yourself up about the losers. Remember, you have a back-tested strategy. It's worked in the past. If it worked in the past, it should work going forward. So don't start trying to tweak it once a few trades go wrong. Remember that cycle of doom video. Constantly tweaking the strategy to avoid the pain of a loss. It's all part of the law of large numbers. We all have losses. By far, the biggest challenge when it comes to trading are the emotions, as we know. Using a checklist is going to help massively in this plight to control these emotions. Think about that pilot again. Is flying risky? Well, possibly. Is walking across the road risky? Is driving on the highway risky? Is lying in bed risky? Not letting the heart pump its blood around the system? Everything has its risks. But what we want to do in trading is to contain these risks, to control these risks. A checklist is used by pilots to control the risk of disaster. A checklist in trading should be treated exactly the same. Now look, I hope you enjoyed this video. Hope you found it useful. Give me a thumbs up if you did. Give me a thumbs down if you didn't. Don't forget to leave a comment, and don't forget to follow us on Instagram and of course on Facebook. If you follow us on Facebook, you can tune in every Monday afternoon live 2 p.m. London time for a live streaming event where we discuss trading opportunities for the week ahead. Till the next video, happy trading and good luck.